Well, the Acorn Group has announced plans to invest 40 billion shillings in multiple property developments in Nairobi over the next 2 years. The property developer, that is partly owned by investment firm Britam, says it's putting up mixed development buildings that include shopping malls, hotels, residential houses and offices, targeting the growing middle class and the lower end of the property market. Here's KTN's Michael Karanja with that report.
Kenya's property market remains an attractive investment option given the growing demand for office space, houses and even shopping outlets. This insatiable appetite is being driven by the country's growing middle class that has seen property developers put up multi-billion projects as they seek to cash in. The Acorn Group says it has already secured sizable chunks of land for the developments that will be targeted at different market segments. In addition to having properties in upmarket areas in Nairobi, the firm will also be putting up shopping malls and mixed-use developments in Molongo, Kitengela and along Jugo Road. The plan for the major investments by Acorn comes despite concern that the country's property market could be staring at a crisis of sorts due to an oversupply of high-end housing units. Prices of houses in upmarket areas, especially in Nairobi, have stagnated, while many developers that had put rental units targeted at the same market segment are finding a difficult time to fill up their properties. For Acorn, this is seen as a temporary shock that will correct itself.
However, property speculators are very few in this market. We do not believe that they have sufficient capital to actually move the market and create a bubble.
The firm said it plans to raise the finances through 20% equity and 60% debt, while the remainder will be sourced from the public. The group is 25% owned by Britam, which is positioning itself to be a dominant player in property development after also taking up a majority stake in housing finance. Michael Karanja, KTN.